as well.
Or you can do Solarplaza on top of if you press the microphone at the top, sorry. Oh, oh, there, yeah.
The broadcast is now starting. All attendees are in listen-only mode.
Good afternoon, everyone. We will start our broadcast shortly. We will wait another 2 minutes for all the attendees to arrive in time. All right. Hi, everyone. Welcome to today's webinar provided by Solarplaza, held in preparation for our upcoming conference, Monetizing Solar and Storage in Europe, which is taking place on the 3rd of March in Milan, in Italy. The event focuses entirely on profitable business models and financing structures for grid-connected solar and storage, which is also what we'll be talking about today. My name is Evelyn. I'm the project manager at Solarplaza responsible for organizing this event. And Solarplaza is an independent conference and trade mission organizer that has organized over 75 events that are focused on the solar PV sector all over the globe. We've been doing this already very successfully for over 10 years, managing to always be at the forefront of this exciting and developing market. And recently, recognizing the influence of the developing storage market, we decided to also incorporate this into our business, which has led to Monetizing Solar Storage Europe. At Monetizing Solar Storage plus Europe, we will be looking at monetizing strategies for solar plus storage businesses, and we will go in depth on business models and financing. It will be a unique networking opportunity with 20 plus utilities, more than 15 speakers, and 150 high-level attendees. This will be a key event to obtain invaluable leads through top executive roundtable discussions, exclusive networking dinners, and one-on-one meeting facilities. So the conference will focus completely on business models and financing structures for grid-connected solar plus storage. Here you can see a selection of the companies and utilities that will already be involved. There will be Sun Edison and Unicos, Alexa Capital all participating. We are proud to announce SolarWatt as our diamond sponsor and also DNVGL as our gold sponsor. The conference will deliver high quality content-driven program, and you can go and check out this program at monetizingstorage.com. Also, I would like to point out that we have realized an infographic with the top 10 overview of largest solar plus storage projects in Europe. This and other content by us is also available at the event website. We have many more events coming up. You can see a selection here. I would like to highlight that storage will also be a topic of importance in the events Solar Asset Management North America, Solar Finance Solutions Africa, and our very first storage-oriented trade mission, the Storage Exploration Tour to Germany, which I will tell you more about at the end of the session. So for today, we invited a leading energy storage technology provider and an expert investor to share their visions on the commercial energy storage market landscape and developments in Europe. Our first presenter will be Bruce Huber, founding and managing partner of Alexa Capital. Bruce Huber has over 30 years experience in investment banking across Europe, North America and Asia, and a firm background in the energy infrastructure and clean tech sectors. They provide advice, research and capital markets financing solutions across energy, mobility and environmental technologies. One of their latest involvements was the successful financing round for Unicos that was announced last December. Our second speaker for this webinar will be Michiel van Schalkwijk, Group Director International Sales and Managing Director for SolarWatt. So Michiel started his career in solar energy in 1993 and has since then held several executive positions in the industry. SolarWatt is now one of Europe's leading manufacturers of solar modules and a provider of intelligent energy solutions for both private and commercial users, which include the storage solution MyReserve and the energy meter. Now, just before we start, I would like to point out a few practical things. If you have any questions or issues during the webinar, you can communicate with us by typing in the control panel on the right-hand side, where it says questions. Questions directed at our presenters will be collected and we will try to get everything answered in our Q&A session at the end. During the webinar, we can sometimes ask the audience for participation by using a poll. You will get sometimes answer this question, which you can do by just clicking on one of the choices shown in the webinar screen. When the poll is closed, results will show on the screen directly after. Handouts are available. You can download or look at them during or after the webinar. They can also be found at the bottom right-hand side. So I want to do one quick poll question. What is the most promising market segment in 2016? You will get some time to just click on the answer. All right, I will give you another 5 seconds for answers to be completed. Then I will close the poll and we can immediately have a look at the answer. All right, thank you very much for your answers. As you can see, we have 32% going for the residential segment, 29 and 31 for commercial and industrial utility scale segment, and the microgrid and off-grid segment is the least appealing with 8%. There's a nice 1/3 division for the top three top 3 segments. That's very interesting. All right. So then, the Monetizing Solar Storage EU, 3rd of March in Milan, Italy. Don't forget to sign up. The early bird registration ends the 31st of January, sorry. And without further ado, I would now like to give the session to our first speaker, Bruce Hubert from Alexa Capital.
Evelyn, can you hear me?
All right. Yes, go ahead, Bruce.
Great. Evelyn, thank you very much. Bruce Hubert here from Alexa Capital. Delighted to be joining Solarplaza today for this discussion. What I've got is prepared just a number of slides to take you through some of the work that we at Alexa Capital have been doing in a perspective on what is a very fast growing, very dynamic storage market and PVS or solar and storage market that is I think we have found a degree of dynamism and excitement in a market that is fast becoming and delivering firm power, firm renewables without subsidies. So at a very, very exciting time in this market. Just a couple of words of background on Alexa Capital for those who do not know us. We are a corporate finance firm delivering solutions dedicated to the energy and power markets. We formed our business about 3 years ago with a focus around the transition of our energy systems to distributed energy, particularly around solar and other renewables such as wind, with a focus around emergence of technology-enabled services models, which are fast replacing the traditional utility model, and a recognition of the secular shift in the value chain downstream to these value-added services. Now, our business has got professionals that draw on, each of them have several decades of experience working across the power sector and financial services, and it's through that we deliver solutions for our clients. We've recently advised on, I think, arguably the two largest global financings in energy storage, including, as Evelyn mentioned, the 50 million capital raise for Unicos, which just closed about a month ago. And you can see a cross-section of some of the work that we've been doing, not just in storage, but in solar, in structured power purchase agreements and structured financings, as well as working around the grid and new energy services models. And a quick snapshot on the next page, around the Unicos financing. We were thrilled to complete this. Unicos is arguably the leading global systems integrator. They're technology agnostic and integrate across 3 continents. We brought an unnamed lead investor, major Asian group, together with First Solar and some family office investors together to capitalize this very exciting business. So a perspective on the storage market, and very helpful to have the Solarplaza poll to kick off this discussion, and interesting to see people's reactions to that. Clearly there are a number of applications for storage, but in the grid scale market, 4 main markets that we see today. That for serving utilities, particularly those utilities that are managing significant amount of intermittent renewable load on their grids. It's a resiliency or stabilization service that is delivered. Secondarily, to that commercial industrial category, which is a behind-the-meter offering. We'll talk a little bit about that. Thirdly, to microgrids, islands, whether these are in island mode in remote locations or microgrids with a weak connectivity to the grid resource. And clearly we're seeing a lot of growth, particularly in Germany, but also increasingly in parts of the U.S., California, with the residential storage offering. Tesla has made big headlines here, but there are other groups, Sun and Battery and others that are rapidly developing and exploiting that marketplace. These segments all have quite different dynamics. I mean, in fact, there are materially different business models and by extension financing models that are part and parcel of each of these segments. And for those operating these markets, that utility segment is probably the most mature. These are utilities that are looking for grid balancing and resiliency, relieving the transmission congestion that these grids are suffering because of very windy days or sunny days, or areas where the grid is managing significant changes in load as a result of largely as a result of intermittent generation supply. So this is about grid frequency management. We also often refer to this as ancillary services, primary, secondary frequency response, delivery of peak power, improving fossil fuel performance, and really maximizing the effectiveness of renewable assets on today's grid. And there's been some fairly significant installations. I note a couple of the projects that Unicos have done, 36 megawatts with Duke Energy in the U.S., a 6 megawatt project in the U.K., there have been big projects in Hawaii and Germany. Grid operators, particularly in the distribution networks, are increasingly managing bursty intermittent loads, and this does become a way of managing that 50 hertz or 60 hertz frequency resiliency, which is critical to maintaining grid integrity and grid resiliency. That second category for commercial industrial users is predominantly it's an energy efficiency product. This is about demand management for those intensive energy users. There's a natural ability to reduce demand charges, reduce the demand that is being pulled from the grid during the red zone, as we call it, this peak period often in the early evening, 6, 7 p.m., 8 p.m., where people come home, they turn their they turn their lights on, their kettles on if they're making their cup of tea or coffee. Their all of the energy surge, and it's an expensive area, particularly for in those markets where commercial industrial users are on half hourly or 15-minute pricing. There's a premium or opportunity to reduce capacity charge and avoid that red zone, as well as improving resiliency, energy security, and integrating renewables behind the meter. So this is a increasingly attractive product area. We're seeing some interesting companies like STEM in California, Bloom Energy, where this demand management behind the meter demand management has become a very attractive product in a very fast-growing category. And not just in California, but we see this across UK, Europe, an increasing number of intensive energy users recognizing the ability to reduce their peak demand by displacing that or distributing that with effective storage behind the meter. The microgrid island mode has probably been around the longest period of time. I think people recognize this. We often refer this as diesel alleviation. These are in markets that have been traditionally served by diesel, and diesel, and notwithstanding what everybody says about power prices and the price of oil dropping, often by the time that diesel makes its way to a mine in Africa or South America or a remote location, that commodity price reduction that may be part of the today's global energy markets has not found its way to that remote location. These are typically in sites where diesel generation may cost upwards of 35, 40 US dollar cents per kilowatt hour, and the opportunity to bring a hybrid energy solution, often integrating storage with solar or wind together, often with a diesel genset, gives the opportunity for these microgrids or island mode, often mining companies or other island utilities, to reduce the dependence on diesel from 100% to, let's say, 40%, 30%, in certain cases, even less. And then lastly, there's this fast-growing residential category, PVS as we call it, PV and storage, an ability for residential, commercial, and small commercial customers to reduce grid charges, move off grid, achieve resiliency, but effectively stabilize their energy bill by becoming more self-sufficient on solar on the rooftop. And this is all part and parcel of a world, and I'm on the next slide, of a world that's moved to distributed generation. It's creating more and more energy islands, not just islands of not islands that are disconnected from the grid altogether, but energy islands that have become communities for which and around which there is distributed generation and a need to balance load. We're rapidly forming a view that that the spending on transmission networks is likely to be reduced or displaced by the increased investment in microgrids as we move energy in around the community, and where storage plays a fundamental role in balancing the flows across the network. I thought it'd be useful to show this slide around storage. People often mix up or confuse how storage plays. There are many different flavors or types of storage, and we refer to batteries most commonly: lithium-ion, lead-acid, nickel metal hydride, vanadium flow batteries. Lots of flavors, types of chemistries of batteries, flywheels. We've got spinning reserves that are playing this load balancing role. The traditional gas-fired power plants, compressed air storage, pumped hydro, they all have an important role to play in the storage market. We're most focused, and where we see the most exciting growth is in this fast response market. And when we say fast response, we're really looking at less than 30 seconds up to several hours, and that's a different storage application than the application that may be multiple days or multiple months or seasonal that you see in other storage applications. They all have a role to play. We would argue that this purple box, the battery category, is the most fast growing and the most exciting, given everything that fast response storage is doing to enable the integration of renewables into our energy marketplace. Another slide we thought would be really useful is to compare storage with our traditional conventional power generation, because it is that traditional gas turbine that has been able to be ramped up and ramped down to provide flexibility in our energy networks. And in the utility example, a gas power station can be ramped up within a matter of seconds or minutes. Generally, it is these are thermal power stations, so to fully ramp up, you're talking about potentially 10 minutes, sometimes more. Typically, a flexibility range subject to size, but you're a power asset that may flex up and down, let's say 10%, possibly 20%. What is exciting about storage is the ability to ramp up and down 200%, up 100%, down 100%, to provide an enormous amount of flexibility in very fast response time. And this is why the utility market, with the greater penetration of renewables, particularly solar and wind, that we're seeing across the markets, has become such an important category. The PGM market in California, increasingly in the UK and Germany, and we'll see many markets embrace renewables more effectively, because these shock absorbers, utility scale shock absorbers, if we call it, that have a very effective role to play in our utility markets. So I'd like to move on and talk a little bit about funding, which is the key topic of our webinar and discussion today, and the upcoming conference on the 3rd of March. As we look at these market segments, they all have very different financing fundamentals and criteria. And I just take it from the top. I mean, most utilities have substantial balance sheet resources. Not all of them, but many of them, and have an ability to incorporate storage either into their rate base to get that recovered by their customers through the regulator, or indeed have the balance sheet to provide a power purchase agreement or a capacity mechanism under a contracted basis to ensure that financing or capital flows are easy to easy to support. And so we see the primary and secondary frequency response markets being quite well funded. I was interested to refer to the poll of a few moments ago and expectations of the residential storage market being the largest category. Interestingly, in California alone, just in California alone, there are certain market forecasts of 4 gigawatts of storage going into just that grid. So This is by far and away the dominant category. It is a lower margin activity, but a very high volume, very significant market. And this is the dominant market for grid scale storage and will be the dominant market for the next few years. The second category, commercial industrial, is fast emerging and probably also alongside residential, but it is of a larger scale than we're seeing in the other categories. It does require a finance solution funded largely from energy savings. So there are commercial industrial customers that recognize an ability to reduce their energy bill by 20%, 30%, 15%, significant percentages through their ability to reduce the capacity charge that they pay their local utility. And so that provides, certainly with a credit quality customer or with a portfolio of customers that financial institutions can look through and through either a securitization perspective or really through a portfolio perspective, can appreciate the credit standing of a customer portfolio and for which there are increasing number of financing solutions. We're seeing the emergence of a number of specialist storage funds. STEM in California just raised a $100 million fund just for customer financing predominantly for their California customers. So this is an area where we're seeing infrastructure investors increasing the number of alternative investment funds, some of the traditional hedge funds, seeing and developing leasing solutions and other financial solutions that play to the credit of the commercial, the energy intensive commercial industrial users, and recognizing that the commercial benefit for this customer group is one that has a payback measured often in 24 months. Plus or minus 2 years can be a typical application in this category. The third category, islands and microgrids. This island mode is a very important category. It is a structured finance solution. Typically, these islands are distributed all around the world, whether they might be in an island as in the Caribbean or South Pacific or Mediterranean, or an island which might be, let's say, a major copper mine in South America, but largely grid unconnected to a grid, and for which the credit standing of that island are an important part of the finance solution. So we are seeing an increasing and growing opportunity alongside renewables, especially solar, but solar and wind, for what we refer to as PVS, that's PV and storage, or PVDS, with including diesel. This is the diesel alleviation opportunity that I referred to earlier in the presentation. Critical to that, the financing of that, or the quality of the offtake, the bankability of the power purchase agreement or the contract, with typically longer-term contracts essential to finance these solutions, and they're typically a reference to diesel, or the price of diesel, and the projects that we are seeing finance are those that are where renewables plus storage provide a firm power alternative to reduce the dependency on conventional, on diesel, and can do that at a discount. So where diesel might be coming in at 30, 40 cents per kilowatt hour, and the hybrid solution is able to provide firm power for a good portion of the year, maybe 70, 80% of the year, at 20-something cents per kilowatt hour, and we are seeing real applications for that. And then lastly, residential. We're seeing a number of fast-growing companies offering residential. We will see that vendor financed in due course, but today these are typically financed by the customer, but a fast-moving market and very exciting in Germany. Thanks in part to some of the financing support of the KfW. We're seeing some of the American markets open up, and we're seeing some very interesting applications in emerging markets as well. Small solar solution on the rooftop in East Africa, Tanzania, Kenya, Rwanda, with a basic storage and mobile phone charging station and LED lighting, creating energy for a community that didn't otherwise have energy. So some very exciting growth, not just in the developed markets, but in the emerging markets, which to date have not had energy. So what are the key funding considerations? And this is perhaps a broad generalization, but bankable currency makes a significant difference for capital to flow. We've seen a number of island mode or distributed generation opportunities in Africa or emerging markets where the power purchase contract has been able to be structured in a hard currency, such as US dollars or euros or even sterling, which may be the functional currency of the multinational sponsor developing those projects. And as we talk about sponsors, the creditworthy, the credit quality of the counterparties is a critical part for capital flow. The banks, the insurance companies, the pension funds, the institutions that are investing in these projects, they do need to see creditworthy counterparties. Now, whether that's the counterparty themselves or whether there has been a credit enhancement through a multilateral regional banking institution like the World Bank or the IBRD or other organizations that are providing credit support. Contract length helps enormously. The amortization of return over a long-term contract significantly benefits the levelized cost of the overall cost of energy. A large portion, it is a common recognition that the cost of energy in large part is a function of the cost of capital, and driving down that cost of capital is affected through longer term contracts where the banks can have an amortization of their capital. So there are a host of contracts that lead to bankability, from the EPC integration to battery chemistries that are supported by solid warranties, known suppliers of the other renewables, whether that's solar, diesel, wind. Obviously, you need an O&M, operations and maintenance contract, and the integration of those assets to deliver the solution. At the end of the day, low-cost energy is a function of well-constructed contracts and low-cost financing. So at Alexa Capital, our focus is delivering those competitive financing solutions for projects, for customers to deliver on their objectives for clean energy, low-carbon energy, and energy including solar and increasingly storage. That concludes the formal part of my presentation. Delighted to open up to Q&A, but first of all, I want to turn over to Michel, who's going to continue with his presentation, and I think we're going to pick up Q&A after that. Thank you.
Michiel?
Yeah.
It's up to you now.
Okay. Can you see my screen?
Yes.
Okay. All right. I'll increase it to presentation mode. All right. Thank you, Bruce, for your wide overview of the possibilities of storage in the world market. Our focus, my focus, will be on the home storage, the SolarWatt My Reserve. As we've seen in the poll, it's one of the 3, but still 32 in the lead, promising markets for storage in the 2016 and the further near future. And we, as SolarWatt, we have designed our own home storage system called My Reserve, with which we won a prize, the EES prize, at the Intersolar last year. The key elements, the key strength USPs of the SolarWatt My Reserve are that they are a very attractively priced home energy system of 5,499 euro, which is the recommended retail price, leading to a very attractive offer and a very attractive sales price of kilowatt hours particularly in the German market to start with. The basic product is a 4.4 kilowatt hour storage, which we can expand to 11 with the same size unit, but then with 2 instead of 3 battery modules in the unit. You see there's 2 battery modules and a DC-DC conversion system. The whole system, which is a DC-sided storage system, has a 93% round-trip efficiency, energy in, energy out, which is currently unparalleled in the world, and it complies with every safety requirement currently available for home storage systems. These are specifically designed in the German market because this is the market where the home storage systems have been introduced first, where also many issues have come up with home storage systems, and the guidelines were designed by the Karlsruhe Institute of Technology, who also helped us and supported us with the design of our lithium-ion based MyReserve. One of the very important USPs of the MyReserve is that it is a very easy to install system. The elements that are receiving at the installer weigh under 25 kilos each, which means that it can be installed by one man, and it can be fit to any existing PV system, because what the system essentially does is mimic a PV system, and so it can be connected to any inverter in retrofit, which makes it very attractive to markets that already have a very high degree of very high penetration of PV systems. SolarWatt, as a company, is coming from the PV industry, whereas since 1993 has been producing solar modules. It's a total made in Germany product with a factory in Dresden, with a fully automated production line with robots coming from car industry, also supported by a key shareholder, Mr. Quandt, who is also a BMW large shareholder. We are a mid-size solar company of 250 megawatts production capacity and some 200 employees. Apart from the modules that we manufacture, we produce the MyReserve battery system also in Dresden, and we produce and sell our energy managing software and hardware at our premises. So where we're coming from is a pure module manufacturer, in which we developed into more system-oriented module manufacturer, including roof integration system, carport solutions, verandas. But we see the company develop more and more into an intelligent system, energy system provider, which we support with the development of the energy manager. So a system that can steer energy consumers in the house depending on the availability of solar, and by the storage system, so that we have a total DC-sided system offer, basically 24-hour present use of solar. Oh, sorry. These are then the items. Just a little sidestep on the modules, because it's still our key business. The modules are not the standard ones. We're not focusing on the glass foil modules that are commodity worldwide. Yet we are investing our time and efforts to a superior module in glass, systems for in-roof design, systems for carports, and systems totally based on 2 layers of glass, so 2 millimeter in front, 2 millimeter in the back, and on which we can give a 30-year linear product warranty, not now down to 80% as general modules, but down to 87%, which means that over a long lifetime they provide the best value for money. These total glass modules are fireproof. They have the highest safety standards against micro cracks because the cells are in the neutral zone. So if the modules bend according due to wind load or whatever loads, put your knee on it, step on it. Micro cracks don't progress, and the modules have a very long production lifetime. On top of that, we provide a system warranty and insurance that even includes the yield when we make use of the well-known PV system design softwares in the market. The yield calculated with these softwares is warranted and insured for 5 years when we use these components. You can see why the system in glass modules is so strong. That's because we have 2 layers of equally thin glass. They make a panel as thick as regular modules, but then with the cells in the middle. So by doing that, the cells are in the neutral zone and won't be harmed when the module is bent. We see, however, that the market will not remain requiring modules by themselves, but in a graph that's very similar to one shown by the previous speaker, Mr. Huber, we see that the market develops from a energy consumer market into a much more proactive consumer or prosumer. We say here 2050 could be the end stage, could be much faster, but in any case, a situation in which there's a dispersed generation of solar and wind and other smaller renewable energy generators, in which also the flexibility and the variability of the energy offered needs to be managed. And in such a system, we see storage to reinforce the grid, to play an active role in peak shaving, and to spread the solar and wind offer. For us, the combination is then solar and storage, so the PVS. What is the actual situation of solar and storage? Starting in the German market, electricity prices have been rising, also due to the fact, of course, that the German energy laws require that the whole renewable integration is paid on the total kilowatt-hour price. So the electricity price is increasing, which makes the attractiveness of a self-sufficiency more and more important. You see that the solar price, the spend on electricity energy in a household increases all the time. Let me move the screen a little bit. Just drop it. With 100% in the past years, between 2000 and 2014, and the gas price or the heat energy consumption has been increasing with 22% in 10 years' time. That in a situation that, in fact, the PV, the solar electricity cost for end users have dropped from 45 cents roughly in 2009 to 9 cents currently, under the influence, obviously, of many factors, not only the fall of the price of solar modules. Also, when you calculate such prices, the low interest rates currently play a very important role. But you see on the red line that the electricity prices have increased, and in the striped area, the difference becomes clear between what you generate in kilowatt hours and PV and what you save on the purchase of electricity. As in more and more markets, feed-in tariffs are being removed, you have a big difference. One has a big difference in the cost you pay to the grid and the cost of, and the price you get back when you put electricity onto the grid. This varies between net metering, like for instance in the States or in the Netherlands or Belgium, to very low prices offered by the utilities, around 6-7 cents to 12 cents in Germany, 6-7 cents in Australia, and so on. So you see an increasing difference between purchase and sales, and that makes that pays for the storage systems in homes. Not only that is important, I will go to the financial calculation later, but also the fact that end customers will decrease their energy bill with significant amounts once the energy system in the house is integrated. So here in this graph we are calculating the difference between let's say a regular system with regular electricity consumption and normal hot water gas based to a system that is 30% self-supply, reduces energy by measuring and monitoring all the consumers with an energy manager with 20%, in which we add an autarky increase for hot water by adding a heat pump, also of course electricity steered, and an increase of autarky with a MyReserve battery to 90%. With that, you see that the energy costs fall with 90% from 1,600 euro to 160, and that will pay for the investments in the whole systems. One has to also say that an end customer is not a financial institute, calculates in a quite different way. Normally, an end consumer saves his money for an investment, could be a holiday, could be another investment, spends his money, and every day after, when he has spent it on an improvement of his energy system, every day after he saves energy and saves money. Now, to go a little bit more detail about the MyReserve battery, I mentioned the USPs in the beginning. I will briefly go into the issues that we think are important for a storage system. First of all, it's that we require a very high safety standard. The systems will be placed in houses, which means that the fire risk must be absolutely zero, which is not the case with all lead-acid batteries. It has to have a long lifespan. For instance, it must match our module lifetimes that we foresee, but at least 20 years. It has to have a very high efficiency, which also relates to the fact that it's not allowed to produce heat. Of course, it must, in the end, not immediately, but to have a very good financial proposition, and it must require individual dimensioning. Not every system is equally big. End consumer systems vary in size, well, where it makes sense to use storage from 3 to 10 kilowatt. With regard to the high safety standards, the MyReserve battery has been approved by Citycom. It requires, it complies with all safety standards. I won't go to them in detail. You can look them up if you want. But it's it's the first battery system that meets all these requirements. Then the lifespan. We're always talking about cycles of batteries. You sometimes hear very high amounts of cycles, but it's not only necessary. It's not only important to look at cycles. It's also important to look at how many cycles you actually need. We calculate that, in fact, we need per year for a home storage system approximately 250 cycles per year, charge and discharge, with a lifetime of 20 years means that the system must be able to live through 5,000 cycles, which is definitely the case with the MyReserve home storage. Then, excuse me. Then the next important step is the efficiency through the whole chain of charging and discharging. The lithium-ion technology that we've chosen has almost 100% battery efficiency. Loses a little bit in the step-up and step-down conversion on the DC side before it gives input to the inverter. Overall, it's a round-trip efficiency of 93%, which is unparalleled currently in battery technology. What do you get? This is particularly aimed for the German market. It will be quite different per market, obviously, if you look at autarky, because it depends on the amount of sun that is being offered and the average use of electricity. On average system, you would determine the self-sufficiency rate by the size of the PV system, the size of the storage, and the amount of energy that you consume. With a 3 kilowatt system and a 4.4 kilowatt hour battery, so let's say the basic unit of my reserve, which is a very standard, let's say, composition of PV system, a consumption of 3,000 kilowatt hours per year, also quite average. You will achieve autarky quote of 61%. You can increase it obviously by enlarging the PV system and enlarging the batteries. You can get to almost 100%. Now, how does it calculate? As I said, in Germany, the kilowatt hour prices are around 29 cents. Not in all markets this is the same, obviously, but in most markets you have more sun. The PV system itself generates electricity at 10 cents. Of course, the My Reserve costs €5,500 with and adds some installation cost. But with an complicated calculation, you would achieve an electricity price of 23 cents per kilowatt hour, which is far more attractive than the price one is currently paying to the grid. So even in a market with little sun as Germany, this is attractive. And there are many more markets around in which we are introducing the My Reserve, like for instance Australia, in which this is a very attractive proposition. How is it configured? Obviously, PV systems are the beginning, then the My Reserve follows that stores the electricity that's generating during the day. And that feeds, the whole system feeds into the inverter. So both the My Reserve and the PV installation act very similar. Well, then the electricity is fed into the local grid. The consumption is measured with an AC sensor, which also steers the DC-DC storage steering system. The battery is composed, as I said, of 3 units. One is the control on the top, and then it has 2 battery packs that are obviously delivered separately because of transportation safety standards. Both the hull plus the MR control, on the one hand, weighs 25 kilos maximum, and the battery units weigh 25 kilos, so they can be installed by one person with a very easy installation. Each battery module has a 2.2 kilowatt hour capacity, which can be used in 100%. In fact, it's a little bit higher, but we state the total usable capacity, and it can be extended to with 3 more battery modules to an 11 kilowatt hour battery storage. This can all be managed with the energy manager that shows the exact behavior of every unit in the house. Of course, you need a plug for every unit that you want to monitor, but you can steer, you can look at the energy balance in the house, what is generated, left in the top left corner, what is generated, what is consumed, what is purchased, what is sold, what is stored, and so on. And you can see a weather prediction, which could be helpful, for instance, if you want to, if you see in here, if you want to steer equipment, for instance, the charging of your electric car, if you have a day to charge, suppose so, you can say that you want to have a charge pattern that's completely fed with the sun. And so if you know your prognosis, you can make use of only solar, direct solar electricity to charge your car. So the whole steering of equipment and can be done with the energy manager. It can be automated, it can be overruled, it can be inactivated if you want to. But in any case, we are very certain that when you know what you are consuming, that you will save energy. This is a well-known mechanism in energy saving behavior. I've added 2 more examples for how an installation would behave through an actual day. I won't go to it in detail. You can see it in the handouts, and you can study on it to see what the effect will be of managing your energy demand in relation to the offer of the solar offer, basically. So what you can see is that a company like SolarWatt has grown from a module manufacturer into a system, an intelligent system provider. Not only the solar generation is important, but also the storage and the management to be combined in a decentralized energy system that is designed to increase the self-consumption and to make a very attractive and energy system that has a high autarky level, which is not only attractive from a kilowatt-hour price perspective, but also meets the demand that many consumers have to be able to actually tell that you can generate generate electricity and money independent from the grid. So that's what we believe is going to be a very important development, not only in Germany but in many countries all over Europe and some others in the rest of the world. I thank you for attending this presentation, and well, I'll be happy to meet many of you at the conference in Milan, and we'll be able to explain a little bit more about the My Reserve in combination with solar. Thank you very much.
All right, Bruce, Michiel, thank you very much for both your contributions. Found them very insightful. Both SolarWatt and Alexa Capital will be presenting at the Monetizing Solar Storage conference, where they will go into more specifics on these topics. As a reminder for the audience, you can keep posting your questions via the control on the right-hand side. And we can now start with the Q&A session, because we already have a couple of questions coming in. One of the questions, Bruce, Michiel, you can now both unmuted, so you can both answer. How can we, one of the questions is, how can we deal with the utilities that are fighting against decentralized generation? Most of them are implementing barriers against storage technologies.
If I may answer that, I don't know if it's most of them. It might be some of them. We see, in fact, a very high interest of utilities with regard to applying or making home storage better known with the general public. On the one hand, it's very attractive for them as an additional product to sell in their marketing machine, as most utilities have become marketing machines as such. And on the other hand, as Bruce explained, all the home storage systems will make the investments in the network, in fact, less important, and the home storage systems more important. And I think they are all quite happy with private end consumers investing in stabilizing of the grid.
Mm-hmm. And so what is the expectation for the development of the energy prices and the grid supply in the German or in the European markets? Yeah, I think maybe Bruce, you have an insight on this?
Sure. I mean, I think that one truism or one real issue that we're dealing with in our utility structures is that there is a significant rise in the non-commodity energy price that is being passed to the consumer, and we are consumers increasingly having to carry the cost of the restructuring that these utilities go through as they turn off their heavily depreciated nuclear and coal capacity, their conventional capacity. We're having to pay for the restructurings, we're paying for grid charges, and so it is becoming increasingly compelling, as Michel has outlined, for residential customers, but also for commercial industrial, to hedge against these power price increases. And it's not just the power price. I mean, we've certainly seen cases of as solar and renewable capacity across the grid increases, you can see the marginal cost of wholesale power may go down, but we do have these big grid charges that we're dealing with, taxes and grid charges, and consumers, residential and commercial industrial, realize that they are exposed to this, and there is a risk factor associated with that, and hence investing in renewables plus storage becomes amongst the most effective hedging mechanism against price increases and volatility, and also provides the control of energy to the consumer and ability to control their destiny.
Okay, interesting. And also, because we've heard a lot about subsidies from the different governments, and are subsidies for storage now completely rejected by all governments, as far as you know? Because this is quite a long example. Last year, the UK Energy Ministry hinted, while it was consulting the solar industry on a cut of 80% on the UK feed-in tariff, that it might soften the blow with some form of new subsidy for storage. So, no electricity storage subsidy was ultimately announced. Do any other governments subsidize energy storage in any of these four sectors if as you say, the investment perspective is already looking up?
Evelyn, Bruce here. I mean, if I could comment, I don't believe there is a need to subsidize storage. We are seeing an economic, a commercial business case for storage today without the need for subsidy. Why is that? It comes down to these multiple business cases. Storage, lithium-ion storage in particular, is providing more flexibility, if you will, a shock absorber for the grids to deliver, or to deliver resiliency, and that's the job of a grid, to provide reliable power. And so today they need storage, and they are consuming storage that is without a subsidy. In the UK, yes, there are some trials going on in terms of integrating storage, because the UK has a problem with transitioning from coal and nuclear, aged, heavily depreciated coal and nuclear capacity, and they're making a capacity payment available. And that capacity payment goes to a whole host of suppliers or participants in the market, and we expect storage to play a role in that. So for the grid, there is a commercial business case today. Similarly, behind the meter for commercial industrial, a business case today, and as Michelle has outlined, in the residential case, with consumers' expectation of growing electricity charges, the whole charge, all of the taxes and grid charges being passed on to consumers. There are consumers who recognize, they look forward at the risk of increased charges being put through them, and this is a way of reducing the dependency on the grid. So we don't believe that storage needs subsidy. What it does need is further investment to drive the cost down, and we're seeing very encouraging trends in that regard. We've had an almost threefold reduction in the cost of lithium-ion as one storage source over the course of the last 2 years. So those costs are coming down encouragingly in a similar path that we've seen the solar costs come down, and genuinely believe that we are going to see a world of PV and storage delivering firm power solutions without subsidy in the not too distant future. It's a very encouraging outlook.
Yes, it is indeed. So there's no funding needed, you claim, but then for investors, it's necessary to have long warranties, which you need a long battery lifetime. And I have a question here. I think, Michiel, maybe you can answer this one. The battery life that you stated seems higher than the product's expectant, especially the 20-year claim, which especially goes in an uncontrolled environment like a garage.
That is not completely true. I mean, the systems will not. They have some limitations in where to place them. That means you cannot put them any hotter than 30 degrees, obviously. So you shouldn't put them outside or in to better inside the house to make sure that indeed you have the long lifetime. And the second part of the question is, is it necessary to have such lifetime, or the predicted lifetime goes beyond the warranty level? What was the question again?
Yeah, it seems that the battery life that you state, it seems higher than what is expected of the product, or what is needed for the product. I think that was the question.
Oh yeah, but that's the same for our modules, obviously. There are many things in the world that live longer than you actually need to have it paid back. But that was the idea, that in the end you make some money on it.
Okay. And how does this storage system integrate with for example, other microinverters?
It can basically integrate with all standard inverters, and for microinverters we have to reset the software in the DC-DC unit, because they have a different managing strategy.
And then if the utility allows net metering, what advantage would a battery system offer other than backup energy?
If the utility allows net metering, then there is then the grid is the storage. But that is a situation that we expect. It's a kind of subsidy. It's a kind of support. It's a situation that has helped several countries' solar business to grow. I don't expect that to last forever. It's pretty uncommon to bring your homegrown apples to the supermarket and require the same price as you would get if you would buy them. That's not very common with your kilowatt hours either. So the normal situation is that you pay much more when you buy it than what you would get when you sell it. And in this situation, there's a definite clear role for storage.
All right. I have one last question. Bruce, I think this one is for you, and if you can keep your answer brief, I'm sorry. How do you see India different from Europe for solar plus storage?
India and the emerging market continue to be amongst the most attractive areas of storage. In India, the application is going into markets where the grid is very weak or almost non-existent. So by combining PV and storage, the community benefits from firm power and power into the evening. So it's a natural benefit. And so we see this combination providing a very powerful offering for the emerging market in India, but also beyond India.
All right. I'm sorry to say we've come to the conclusion of this webinar. I hope that we answered as many of your questions as possible. Recordings will be made available soon. But yeah, the best way to inform yourself on these topics is, of course, to register for the upcoming Monetizing Solar and Storage Conference, where we will really go in depth on the business model and financing. All key players in the field are present, and you can still register for a ticket at early bird pricing. And then, lastly, to conclude, this June we are also organizing the Storage Exploration Tour to Germany, where you can really have on-ground experience and obtain a unique market insights and meet new lifelong business partners by just going there, meeting the top management of the leading manufacturers, leading players, leading suppliers, visit the utility. We'll do some, you learn from practical experience in the leading market, and yeah, you can explore the latest developments and innovations in the country that's always been ahead in the storage market. I would like to thank you for your kind attention, and hope to see you the 3rd of March in Milan. Thank you.